I'm curious from your perspective, watching what's happened to FTX, in some ways being somewhat involved in the sense that there have been some inflows into Coinbase in the last couple of days, and your CEO, Brian Armstrong, has told us that he has taken a look at the assets and has passed on them. What is there to be learned from all this? What changes about crypto on the wake of this?
Thanks for having me, and it's such an important question, and one that we need to all as an industry step back and say, how do we learn and where do we go from here? And for us, what this means is it's so critical that we have clear regulations in the US so we can drive volumes to the onshore providers, so we can offer customers the transparency and the disclosures that they deserve, and that everyone understands the risks that they are taking by participating in the crypto economy. So we continue advocating for clear policy in the US, and I think that is where we need to go. Thoughtful regulation.
Beyond regulation, how do customers, when they work with an exchange, know that if something were to happen, that they would get their money back? I know on your website you say that you're not FDIC insured, but you do have insurance. Do more companies need to be getting more insurance? Do they need to be seeking help from other backers to know that they can make customers whole in this type of event?
It's such an important question, and I think it depends on the business model. So at Coinbase, we're different, and as we clearly disclose, we are holding customer assets one for one. We're not rehypothecating them, so there can't be a run on the bank at Coinbase. I do think when you have platforms that are rehypothecating assets, that's when you need to really understand the risk. You need to understand what is the equity capital that's being there. Is there a safety net beyond equity capital? What happens if the company mismanages the assets that are protecting these liabilities? But at Coinbase, that's not what we're doing. So that doesn't impact us, and our customers are safe on our platform because we do hold their assets one for one. We don't rehypothecate the balances. We don't do anything without the client specifically directing us to take action, and we think that differentiates us across the space.
And transparency with regards to the disclosure of those reserves and disclosures of those rules. I am curious, though, you can be sort of the good actor in the space, but if everyone around you, or at least a significant number of people around you, are bad actors, you have to be a little bit concerned as to whether that rubs off on you fairly or not.
Well, there's going to be an indirect impact of this, meaning a lot of customers are sadly losing money, and this is not a day that we hoped for at all. And so we need to figure out how we rebuild trust. We need to continue to fight for that regulatory clarity, the transparency, and the utility in crypto. And we believe with all of that, we will build back from this. And we're going to see definite lower volumes, I would say, because people are going to hold back at this moment in time. We're seeing them high today, but I think that that is going to be, as we work through this volatility, we're going to see players step back from the space and say, was I really here? So we need to re-earn those customers' trust. We need to build products that they can have confidence in, and we need to build an environment where we keep this innovation here in the US and we don't push them to bad or risky platforms.
On that note, CZ over at Binance tweeted out an important comment saying that FTX going down is not good for anyone in the industry. This isn't a win. Global confidence is shaken. Regulators will now scrutinize exchanges even more. Licenses around the globe will be harder to get, and people are going to be coming and attacking us. How do you rebuild confidence? How do you make sure that regulators speak with you, I guess, in an appropriate way, appropriate regulation, responsible regulation, and that you can get licenses and that they're not harder to get?
So I think the licenses are hard to get, and I think that you have to have amazing controls. You have to really be thoughtful about building your business to be compliant, and that's what we've done from day one. We are licensed around the world. We're licensed here in the US, we're licensed by the CFTC, we're licensed by the SEC with some dormant broker-dealer licenses. We have a New York BIT license. We have money transmission licenses in the UK and around the globe. So I don't think that they're going to be harder to get. I think they're going to be important to get, and I think that players that do not have the right compliance programs or controls are going to have a hard time getting those, but that is not who we are. We have always strived to be the compliant, trusted platform in this space, and I think that's a competitive advantage for us now as people understand the risk that they may take by working with players that are not regulated. Now, I think we need to enhance regulation in the US. I think we need to continue to strive, which is why we've petitioned the SEC for more clarity around the broad crypto landscape, but we're having really productive conversations there, and I'm hopeful that we will bring that clarity in the US in the coming quarters.
Alesia, as far as the SEC goes, part of the issue that happened with FTX was around FTT, the token. We know the SEC has been trying to categorize a lot of tokens as securities and then therefore enforce them or create enforcement actions as such. How does what happened with FTX complicate that narrative when it comes to tokens and the SEC's involvement?
It's a great question. So I can't speak about whether FTT is or is not a security token. I don't have enough information there. But I think what got them in trouble is they levered up that token. And that is different than whether a token is a security or not. There was excess risk taken in that entity.
I want to go back here to something that Taylor was touching on, and that it really is about the regulatory effort in Washington. When we were all looking at the spat between Sam Bankman-Fried and CZ that was playing out over social media, a lot of it sort of linked back, or at least it was alluded to in some of those tweets, this idea of some of the lobbying efforts that have been going on in Washington, particularly by Sam Bankman-Fried. There has been a lot of talk here that who is being represented in the crypto space right now in Washington is going to be a real big determinant right now of, I guess, which companies thrive in the future, and more importantly, which companies have that sheer, have that veneer of being more respectable. I'm curious about your lobbying efforts right now, why we haven't seen a little bit more publicly of Brian Armstrong, and whether there is a strategy that you have to sort of pursue in conjunction with some of your peers, some of your competitors.
Thanks for that question. We are very active in speaking with lawmakers around the world, both in the U.S. and abroad, speaking with all the regulatory agencies, members of Congress, and we also are active participants in industry groups. So through Crypto Council for Innovation, we have a lot of policy efforts that we broadly work with the industry. We seek input into all of the comment letters we provide, and we really do want to create a level playing field. We are not trying to create specific policy for Coinbase that benefits our business. We are trying to advance transparent regulations so that all crypto market participants and all Web3 developers can really thoughtfully bring products to market and feel confident in the U.S. regulatory system.
I think your comment there that you're speaking with all the regulators is an important one. There's been confusion if you should be working with the SEC or the CFTC. Who is the appropriate regulator in your mind?
I think all is the right answer here. I think that we feel very confident that the Stabenow-Boozman bill should move forward. And that would give spot jurisdiction to the CFTC, but we also believe there's a world that there's going to be lots of security tokens, which would then fall under SEC oversight. We also think stablecoins should move forward and would probably come under Fed and Treasury oversight. And so I think it's important to talk to the underlying technology is going to give rise to so many new assets, and those are going to fall under different regulations, different jurisdictions. And so we think it's important to be having conversations across the board, but taxonomy is critical here. Definitions are important here, and not just treating them as a one-size-fits-all.
Alesia, is there anything about the processes at Coinbase that have changed in response to what's happening into the market right now?
You know, I'm so proud of our risk management, and we invested in risk management, we invested in compliance, we invested in transparency and security from the very start. And so we have revisited all of our counterparty risk, we have carefully looked through our portfolio, and we disclosed yesterday that we have about $15 million of exposure. But that was sized and approved in connection with what we thought the risk was, and this is a risk we can take. So nothing materially changing. We're looking for the opportunity to make sure that customers understand that our platform is different, that regulators understand our platform is different, and we're advancing the regulatory conversation, but we feel really good about our approach to our products and services.
Alesia, you came from a large asset manager before you had joined Coinbase, and Coinbase has been working with a lot of institutions. A lot of people are losing a lot of money when it comes to their investments in FTX from last year and earlier. So how much trust has been lost among institutional investors who have been entering this crypto space?
So I think it's important to note that you can have losses in crypto, you can have losses in financial services. We were highly regulated in financial services, and we still had MF Global. We still had Madoff. And so regulation is a tool, but there can still be bad actors. And so it's a very sad day that customers have had losses on FTX. We didn't want that to happen, and we are very sad for the impact on the industry, but we shouldn't hold one bad company as a reflection of the entire ecosystem and what the potential of this asset class is, or against all the players in this ecosystem. So I think we're continuing to have conversations with our clients and the institutions about how we move forward from here, how we're different, how we rebuild trust, but how we all drive the utility and adoption of crypto more broadly.
Talk to us about some of those institutional players. We know, of course, Coinbase, a publicly traded company, but when we think about FTX and the likes. You have a lot of VC firms and other big institutional investors who had also helped support this company. Now, in many cases, the Sequoia Capital is saying full write-downs on that investment. BlackRock, Tiger Global, SoftBank also have been involved. Do you see any ripple effect or ramifications of investment of money in this industry from backers, from supporters, that now might be rethought?
I definitely think people will revisit their due diligence. But when I think about those large firms you just named, this is a loss to them, but they're in the business of taking risk. And so I hope that these losses are contained within their risk appetite as they think about diversification. But I think it's a good lesson for all of us around what they need to do for due diligence, the importance on keeping legal entities segregated, that we don't have a lot of intercompany relationships between different risk-taking entities, that we have transparency on disclosures, we have transparency on reserve setting. Yeah. And I think that's where we all need to go.
Even prior to the latest ructions in the crypto market stemming out of FTX and Binance, there was a lot of concern here about the slowdown in trading activity. We know that you guys announced, I think back in June, that you were planning to reduce your workforce, and today we got a statement out of your communications director that about 60 positions are being cut as part of that broader initiative. How much further does Coinbase need to sort of reduce their headcount, and more importantly, what is the cost structure going to look like when you get to the end of this?
Thanks for the question. So we just announced earnings last week, and we talked about this with our investors. And what we do is we scenario plan. We look at revenue opportunities, and then we are sizing potential losses against those vis-a-vis our balance sheet resources. We always talk about going through a cycle and ensuring that we have a strong enough balance sheet to weather any storm that comes. So these are new events. We're going to have to take these into consideration. We're going to have to re-underwrite all of our products and understand what those revenue opportunities are. And then, if needed, we will take appropriate action on the cost side. We have nothing else to announce today. Today's action were surgical. We are just making sure that we are not wasting a dollar, that we're being very efficient with our resource allocation, but broader information will come out on future earnings calls.
Is there a chance that the cuts can go broader than the 60 that we have reported today? And what types of positions are the ones that have to go?
So we have nothing to announce today, but if we see that there's going to be further depressed revenue, and if we believe this is going to impact beyond the scenarios we've already planned for, we will have to take further cost-saving actions, and I'm not prepared to go into the details of what those could be.